Okay, well, good morning, Checkmate crew. It is 30 minutes after the opening bell of the New York Stock Exchange, 10 a.m. Eastern Time, on this Tuesday, January 24th, 2023. Yours truly, Mickey Blindside here with your market memo. So, interesting start to the morning today. A lot of stocks got halted. Which is interesting. I think it was just some bad prints from the exchange. Not really sure if there's anything important because of that. I mean, I think there were just some bad prints that came out. Visa, Verizon. It happened in a lot of the value stocks actually. Verizon, XOM. Some bad prints here. What else? XOM. There was Visa, Verizon, XOM. I mean, there was just a list of Morgan Stanley also. Not really sure what to make of it. I'm sure it just happened and they just got unhalted just like 15, 20 minutes ago. So not really sure what happened there. I'm sure later in the day we'll find out. But just in case though, I know, you guys know how I feel about TA. Try to explain that with TA. And of course, these kind of things are very, very rare. It could have been like an exchange error or something like that. But I know a lot of people who are technical. You guys will probably have some bad data because of this, opening, closing prices, range, average true ranges and things like that. So be very careful if you use those kinds of studies. Be sure, on some brokerages, they'll actually let you make a correction on a certain chart like this. Like if something like this happens, you can actually manually correct this candle. So, if you guys are using those kinds of studies, technical studies, you may want to consider making those corrections, on your charts. Okay, just wanted to update you guys on that. Broad market, S&P 500, we are down 0.5%. We're coming down, and it's just a little bit of a pullback. We had a monster 2-day rally. Could this be a turnaround Tuesday? It kind of looks like it already is, right? Turnaround Tuesday is the opposite direction of what happened that Friday and Monday prior. We've seen a lot of turnaround Tuesdays where the market sells off on a Friday and a Monday, and then the market rebounds on Tuesday. We're seeing kind of the opposite: Friday, Monday up, Tuesday down. So will this continue? It might. I'm still looking for those levels, on IWM. I told you guys that I'm looking. Hopefully we can get this at a little bit lower price. I mean, I'd love to see this get breached and we're able to buy right here. That would be an awesome buy. I'm also looking at levels at QQQ. It'd be nice if QQQ can fall down as well too. Speaking of which, let's actually take a look at one of our indicator charts, the IVW IVE growth to value. We've actually seen, remember the tax thesis for the end of the year in December? I said, hey, after that 30-day period, which was January 20th to the 24th, would be the bulk of the block trades that were done in December. Those 30-day wash sale periods, it was going to be over January 20th to the 24th for a bulk of those trades. And so we're already seeing some of that, those bids come back, especially in the semis. If you look at the AMDs, the NVIDIAs, I mean, they just roared to the upside. AMD, look at this. Today it's a little bit down, but I mean, look at the last 2 days. I mean, it was just crazy bids coming in, pushing prices higher. NVIDIA, just crazy bids coming in. And again, I think it's because a lot of that selling that happened in December right here. Remember, I told you guys a lot of selling happened, a lot of tax selling happened here. And after 30 days, now they're able to get back in without, incurring a wash sale. All right. So I think that's where a lot of the bids are coming in. Of course, I think most of that money is still waiting for better levels. And I do think that if some of these tech stocks can come down, a lot of that money is going to re-enter that market. I mean, you may think that a lot of the money has already re-entered. I mean, some of it has, but by my calculation, I think there's a lot of money waiting for a dip to buy at certain value areas. And I think if we can get a good enough pullback in some of these tech stocks, we might see the bids really rush in. But I think a lot of that big institutional money is waiting for a deeper pullback. And so we'll see. We'll see what happens. Having said that, there is some of that institutional money that has already started buying. I mean, like I said, they're already buying the semis, some of these tech stocks. Again, tech stocks that's why outperforming value, and that's why we're seeing this curve up, although it is pausing a little bit. Let's see if it can make a higher low on the IVWIVE growth ETF to value ETF chart. We'll see if it can start an uptrend. But having said that too, I think the short-term hedging is really going up because of this. As shares are getting bought, institutions are hedging those shares as well too. So the VIX 9-day has spiked up, but then if we subtract it with the 30-day VIX, it popped up yesterday. It actually got into the positive territory where the shorter time frame 9-day VIX is higher than the VIX 30 days. And so that is usually when we see a pop where that spread gets positive, usually that means that we're seeing a lot of shorter term hedging, perhaps a fear of the unknown within the shorter time period. Okay. And so that's kind of reasonable as we are getting into earnings. A lot of these tech stocks were being bought. A lot of the tech stocks have earnings this week and next week. Oh, by the way, next week we also have FOMC as well too. Now it is very much expected that we're going to have that a 25 basis point increase for the FOMC for the rate hike. Let's get some of the odds up on my screen here. Oops. Let's see here. So this is for February. So February, yes, it's almost like 100% that it's going to be a 25 basis point rate hike. Especially with the inflation reports that have come out recently. It looks like the market is still pricing in another 25 basis point rate hike for March as well. And for May, it looks like we sustain that top nominal 5 of that 475, 500 basis points for the Fed funds rate. June. Let's take a look at the June 525 odds. They're staying, actually it's going up a little bit, just ever so a little bit. So we might have a chance at another rate hike maybe in the summer or so. But really, I think is the market still pricing in a rate cut? Oh, look at that. Now it's even, maybe I think it was December, right? Yeah, so in December, it's still factoring in at least a rate cut by then. So we'll see what happens. But I think these odds shifting, I think pretty much the shorter term is known. What's not known now is when is the Fed going to cut rates, right? And maybe we get some of that news on this one. I think by this FOMC or by next, by either the February 1st or the March 22nd, if the bond market shifts in their odds in a rate cut for the end of the year, that's when we could probably see that yield inversion play blow up. As I mentioned last week, right now the yield inversion trade is super crowded. Basically, right now a lot of the bond market participants are betting that the yield curve inversion will actually steepen. So they are short the shorter dated maturities and they're long on the longer dated, like, 10, 20 plus year treasuries. And so I think that trade is going to blow up in people's faces sometime around March, April, as we get closer to the tax paying season. So perhaps maybe the March FOMC might be the impetus for that. If by then the bond market doesn't feel as if Papa Powell is going to cut interest rates, then that trade could blow up in people's faces. And right now, it's like the bond market is pretty much saying that the yield curve is going to invert further, that there's going to be a recession, and that the Fed is going to cut rates by the end of the year. Now, what if that doesn't happen? What if the recession doesn't happen? What if the recession doesn't happen? What if Papa Powell doesn't need to cut interest rates? What if it's not that bad? Then, that yield inversion trade may have to unwind. And again, it's very, very crowded. That unwind could be a little violent. All right. And so that might be our opportunity to buy, just because so many things have run up so much. So I'm going to be really, really patient on this one. We'll see. Okay. I really do want my levels. And I think once we get our levels, we're going to see a pretty nice, we could see a pretty nice return as the market rallies forward. And again, I'm only going to be buying those IWM or QQQ leaps like I've talked about, only if our internal market data remains strong, and it is right now strong. Okay, everything is curling up. Okay, the New York high-low line, everything is curving up. All the moving averages are in order from fast to slow, and the actual cumulative line is above all moving averages, and all the moving averages are also pointing up. This is a very positive signal. It means that the rallies can continue. It has some power to continue. Okay. If you actually also look at our junk bonds ADL, our advanced decline line on the junk bonds market, we're also seeing that strength also as well too, as I've posted every night. It is still on that uptrend. We're still in a mini little uptrend here on the junk bonds ADL line. It's already made a higher high and a higher low. And so we'll see if that continues. And as long as that continues on that pullback, that is the pullback to buy. Okay, as long as our internal data remains strong on that pullback. Okay, so that would be a price back test, as the risk asset, or in this case, the indices, as they come down. If our market internal stays strong, well, that would be the ultimate signal to buy. Okay, and we just haven't seen that yet, because we just haven't seen a big enough pullback to test whether or not our internal data remains strong on a pullback. So we need that pullback first. So if you're a bull, you're gonna want that pullback. Okay, we're seeing a slight pullback. We'll see if it continues. If it does, good for us. If not, well, we'll just have to wait, okay? But I do think even if we miss this one, we'll probably see another opportunity sometime in April, or at least that's what the data suggests at the moment. All right. What else? Crypto. You know what? Open interest is actually going up in crypto, which is kind of interesting, actually. It's very interesting that it's actually going up now. Let's see here. Let's go back to this. Where is my open interest chart? I just had my open interest chart here. Oh, there it is. All right, there we go. So if we look at notional values right now, right now ETH has got about 4.9 billion. So it's still not yet, not high enough yet. But if you look at Bitcoin, okay, if you look at Bitcoins, it's at 6.2 billion. Which is very interesting. Now, it's getting interesting now. So it's 6.2 billion, if just a little bit higher, and I think we could start using this. And if you actually look at the notional value, it's actually getting to its highs. The notional value open interest was, it made its high around, in 2022. It was around September or November or so, and it's kind of returning back to those levels. Way faster than ETH, actually. ETH still has some ways to go before it gets to its highs around September or so, the open interest notional value highs. I think it was like 7.5 or somewhere like that, 7.5 or 8 billion. Let's see here on the notional scale. Yeah, it was in August and actually August and October. Yeah, right here, 7.6 and $8 billion. So we're still a ways away from that, but Bitcoin has already kind of gotten close to its highs already. So, we're seeing, let's see what kind of trades are happening here. So it looks like a lot of that is shorter dated as well. January, February, it is mostly in calls rather than in puts. And there is a slight edge in calls being bought. I mean, of course, it's a newer asset. It's probably a lot more retail participation in this. I think I did not notice any block trades in both ETH and in Bitcoin's options market. Yeah, I mean, these are still relatively small. I want to see 6-7 figures, and even then it's not really all that big. I want to see like a series of those. That's when we can really judge or at least that's when the options levels can get really clear, and it can help us kind of with price action around those big expirations. But until I see those larger trades, I mean, these are still relatively small. Okay. These are still relatively small. Now, it could be that, that perhaps market participants are using smaller orders, like, perhaps algorithmic trading. It's very possible. So I'm going to be basing it mostly off of the notional value of the open interest. And again, it's increasing. It's at 6.2 billion. It's getting up there. And we'll see what happens. But we're already seeing some of that forward skew in some of the closer dated options. So it looks like there's some risk taking happening. And again, we've noticed this where crypto has really followed the junk bonds advanced decline line. And, I think it's because a lot of crypto, the industry is dependent on cheap credit in order to operate. And so as there's more appetite for corporate credit, that could be the impetus for a lot of these firms to keep participating and expanding their crypto operations. And we'll see. We'll see if this continues. But definitely, if ETH's OI can get to about 6.5-7 billion, and if Bitcoins can start getting into like the 8 billions or so, we're going to start taking a much deeper look into the options chain and options positioning on Deribit. But until then, we'll just monitor it very patiently and see what happens going forward. Okay. As far as our current positions are concerned, right now we're seeing some of the some pullbacks in some of our tanker names. I really want Starbuck to kind of pull back just a little bit so I can either roll that covered call that I have at 21. I have those leaps for January 2025. Those 18 calls, but then I sold the February 21 calls against it, so I'm a little bit underwater on those covered calls. But if this price can come back down just a little bit, I'd love to roll that covered call into March or April or something like that and collect a little bit more premium. Ideally, I would want to roll out and above. So just in case, let me just show you guys. Right now I got these Februaries. So if we can get into March, I mean, right now the March, and plus the March participation is quite low. So the spreads are kind of wide. But if I can get into the 22 strikes, that would be ideal. So if I can roll my 21s into the 22s and collect a little bit of premium on that, that would be the ideal situation. For that, I need SBLK to come down just a little bit more. Okay, just a little bit more. All right. Our other positions are, I cover them every once in a while. I guess we'll cover it here too. Quad U, I got rid of my covered calls. I got no more covered calls on them. So I'm waiting for price to go up. I think if the dollar can keep coming down, we might see this keep going up. And if this gets to over 8, if Quad U can get over 8, actually, let's pull it up on the big chart here. If Quad U, all right, can get to, like, let's say 8.5 or so, I'd love to sell covered calls then. All right, so I think there's another leg higher, and maybe around 8.5, I'm going to sell those covered calls. We'll see if it can get there before 2 weeks left on the February chain. I'll sell some close to at the money calls on the February chain. But if by the time we get to 8.5, there's only, there's less than 2 weeks left, I might just go into the March contract and sell those March near at the money calls, probably the 9s or something like that. We'll see. If it can get to 8.5, those 9s are going to be probably around 40-45 premium. If the IV expands, maybe we might get lucky and get 50-55 or something like that. If it really expands, maybe 60, but I'm not really planning on that. But yeah, but if we can get some decent premium out of this, that would be great. That would be like a good 5 or 6% premium on the share price for about a month or so. Which is not bad. That's a great premium to get. So it's a Quad U is turning out to be a very good premium writing vehicle. I think the last one, the February's that I had, the February 7 calls, I think we got in at average 36, and we got out and we sold it for 36, and we bought to close at 20, so we collected about 16 cents of premium on that one, which was about 2.5% for about a week and a half worth of holding on those covered calls. So that's a great return, and as hopefully we can bring down our cost basis over time. That's the whole point of writing those covered calls consistently on our holdings. Okay, we have Quad U, but we also have UUP, which is our hedge. I have this our hedge already, the January 2024. Calls. I mean, these are pretty much underwater, but I mean, remember how we got this paid for? We had this paid for with some of our gains from UVXY and some of our other gains that we had in the last quarter. So these are just hedges. Hopefully we can find an opportunity to cash out of these hedges. I wouldn't mind a nice little pullback here before the market decides to either rally or whatnot. But I'd really love to see a pullback so that we can, and then maybe a pullback in the markets induced by the dollar going up. That would be ideal for me. So at least I can cash out of those hedges and add to my positions at a lower cost. So we'll see if we get there. Okay. I'm not, I can be patient. I can wait for this round for the pullback, or I can wait for the April pullback, one or the other. It doesn't really matter to me. Okay. Doesn't really matter. Anything else you guys want to look at? Going once, going twice. All right, then. In that case, that wraps up our session of the Morning Market Memo. Our Discord invitation link is in the video description below. Come join our Discord. Be a part of our growing community. There's no sub fees, no paywalls. It's of the people, by the people, for the people. And if you enjoyed our video, hit like, follow, subscribe, comment, show us some love, baby. All right, I'm going to be back on tomorrow and on Thursday, 30 minutes after the opening bell of the New York Stock Exchange, 10 a.m. Eastern Time. I'll see you guys then. Trade safe.